I am the most bullish on US stocks that I have been in a long time. Today I'm going to explain to you guys why exactly I am so bullish on stocks for like the next year and a half or so, and kind of the reasons behind it in depth. I'm also at the end going to share with you one industry that I do not believe is in a good position to take advantage of all this that's about to go on, and I would not touch any stocks in this industry personally. So let's get into this, guys, but I am very bullish to say the least. So the first thing I like to kind of pay attention to is what are we at on the forward PE basis, okay? The forward PE basis means what companies are expected to earn over the course of the next 12 months, okay? So what are we looking at here? So anytime I see like the forward PEs on stocks are over 25 as a whole in the S&P, I say stock market's very overvalued at those levels, okay? 20 to 25, we're kind of, in fair value or maybe a little upper, overvalued there if you're in 20 and 25. 15 to 20, you're starting to approach fair value to undervalued as you get close to that 15. And when you get a forward PE basis under 15 on the S&P 500 as a whole, like that means the stocks are extremely undervalued. Right now, we're at around a 17 forward PE on the S&P 500. So that to me tells me that we're fairly valued or maybe just slightly undervalued, okay? So that's exciting, but that's not really the main part, okay? That's just a piece of things, all right? This one is huge. The tax rate's going from 35% to 21% cannot be overstated enough, guys. This is massive because this is for literally every single corporation out there that's a US corporation that was paying 35% before, now gets to pay 21%, which is a way dramatic drop in taxes. Well, I mean, I haven't seen something, there's never been anything in my lifetime where corporate taxes have dropped that much. There hasn't been anything like that in a long time. Why does this help? Well, it makes companies much more profitable, okay? Which pushes up their EPS and all those type of things, which brings down forward PE basis even more, okay? Also, with all that new money, what can they do? They can expand their businesses if they want. They can invest in new things if they want. They can spend more money on dividends to pay out to shareholders, right? The more dividends you pay, the more people want to get in these stocks and whatnot. But the other huge part of it is share repurchases, share buybacks, basically meaning a company buys back their own shares to expire those shares, which then ends up pushing up their EPS even more because there's less shares to be counted against their net income, which is a beautiful thing, guys. Almost every single corporation I follow out there is doing a big share buyback right now. They're all buying back their shares right now because they have so much cash on hand now that they can get to, and their corporate tax rate has been cut massively, guys. This is such a big deal. This is such a big deal that corporations, can be much more profitable basically overnight. It's dramatic, guys. The way to look at it is the government, you could say the government was a 35% shareholder in all US corporations. Now they just went down to a 21%. So if you're a shareholder of ABC company, before you really owned 79% of the, or before you really owned 65% of the company, now you own 79% of the company. That is massive for all shareholders out there, guys. I cannot like state this enough. Like, I don't know how the media has not picked up on how big of a deal this is. Like, this is gigantic, guys. This is really gigantic. The third part is lower taxes on me and you. Like, lower taxes on us. Like, that obviously helps. What happens when people have lower taxes? Well, they have more money to go out and spend and go do things and whatnot. Now you can make the argument that long term, how's this going to have an effect on the US economy? Are we going to be able to grow our way out of things? Is this going to add more money to the deficit? We can have that argument, but that's not going to affect anything, in my opinion, in 2018, 2019, which we're talking about for this video. If you want to talk about what's going on in the US economy in 2030, 2025, 2040, we can talk about that, but that's a whole different discussion. The fact that taxes are getting lowered on us, it basically means we have more money to go out there and spend, okay? Unemployment rate is already pretty low. It's already really low. We're at a 4.5 or 4.6% unemployment rate, right? As we go out there and spend more money, do more things, the corporations, they have to add more and more employees on. That brings down the unemployment rate even more. That makes wages go up even more and more, guys, which strengthens the economy because then more people get to spend more money out there, okay? Now, let's just talk about interest rates, okay? This is something that people, kind of stress on. Well, interest rates are going up. This might hurt loaning activity and whatnot. The way I see it, interest rates are extremely low right now, okay? They will continue to be low throughout 2018 and into the majority of 2019. 2020 pass, maybe interest rates do start to get really high, but it's not happening in 2018. It's not happening in 2019. Like the little quarter percents, they keep moving the interest rates over, you know, a 3-month span or 6-month span. That's not going to dramatically increase things or make everybody say, oh, I can't go buy a house now. I can't go buy a car now. I can't take out a loan for anything now. No, maybe a few years from now, the narrative has changed, but not right now, guys. It's just unrealistic. And the fourth thing is the fact that companies can now repatriate their cash over to the United States is huge. What happened is the majority of big corporations that do international business have had their money basically locked up overseas. They couldn't bring it back over, or if they wanted to bring it back over, it was going to be at a very unrealistic tax rate that pretty much no big corporation was willing to do. So that's why you saw huge corporations like Apple, for instance, actually take out loans so they could buy their own shares back just for the mere fact that they had all this money tied up overseas. Now the fact that they can bring that back to the US, this is a huge thing, guys, as far as corporations being able to reinvest in their businesses, being able to reinvest in their employees, being able to reinvest in their stock, buy more shares back and do all those type of things, be able to spend more money on dividends, which makes even more people want to buy their stocks, right? This is big stuff, guys. This is not like a little teeny things, like incremental things. These are massive. These are massive. If you ask any big corporation, what are the two main things you would like for your corporation to happen? If you ask them that, 3 years ago, 5 years ago, 10 years ago, every single big corporation, every single CEO would say, we need to have our tax rates lowered to be more competitive internationally, okay? And we need to be able to bring our cash back over and not be taxed at an unrealistic rate. Every single big CEO has been preaching and knocking on that door for the longest time. And the fact that it's now happened, guys, this is so huge, okay? Now, I want to talk about an industry that I won't touch right now and that I can see being actually hurt by this, by the strengthening economy, by wages going up, by all this type of stuff. There is a particular industry, okay? So when I think about the economy strengthening, I think about, the unemployment rate dropping even more, wages going up. So any industry that is involved with paying workers minimum wage or just barely above minimum wage, those industries scare me a lot, especially when it's an industry that their products are lower price and they don't really sell that many more products in a good times, in a great time as far as the economy goes, versus, a time when the economy is just okay. Those type of companies are usually fast food restaurants. Fast food restaurants, I pretty much have no interest to buy any of them. They could be trading at way lower levels than they are right now. I have no interest at all in owning fast food restaurants because a person is not going to spend more when the economy is good on a Big Mac than they spend when the economy is bad or when the economy is just okay, okay? The fact that they got an extra $1,000 might actually mean they might not even go for fast food. They might go one up, right? They might go fast casual. They might actually go to a restaurant or something like that. It's a big change, guys. But those companies, they end up having to pay their workers a lot more money. We see minimum wage across the United States going up pretty much state by state this year. It's going to continue throughout the next few years. Then on top of that, on top of just like the minimum wage going up, all these companies are going to have to pay more and more to get workers in because there's less workers to hire. In a recession, it's almost a perfect situation for fast food restaurants and whatnot because they're still going to get massive amounts of customers even in those times, but there's so many people looking for jobs that people are like, oh, $7.50, I'll take what I can get right now. Oh, $8 an hour? Okay, sign me up. I'll take this job. I need whatever I can get my hands on for money right now. I'll just take this crap job. That's how people look at it. When the economy strengthens, those type of industries don't do well. So when I look out, I'm looking at companies and I'm saying if this company is one of those that pays lower wages, near minimum wage, and their business isn't going to really benefit from all this stuff that's going on, those are the type of companies I have no interest in being in, guys. So, and the fast food industry is the first one that comes to mind when I think about this. So I would love to hear your guys' opinion in that comment section about that. Also, let me know, are you very bullish on stocks? I would love to hear from you guys. Like I said, I'm the most bullish I've been in a long, long time, guys. It just, so these are such big moves. They're not like, just like little incremental things. These are massive, guys. When you drop the tax rate from 35% to 21% on corporations, that makes them so much more profitable overnight and be able to do so many more things overnight. It's amazing. But once again, we can discuss, like, you know, how this will affect or not affect the economy a long time from now. We don't know about that. We know, you know, we've tried the higher tax route and whatnot, and what's ended up happening, the deficit still went up massively. The you know, federal debt still went up massively. So we're going to see if this whole experiment works out, where you lower taxes and maybe, you know, we can grow our way out of this and whatnot. It's going to be fun to see how it all works out. I'd love to know your guys' opinion in that comment section. Thank you for watching as always, guys, and have a great day.